I'm Brian Hensley with Intego Financial Group. Thanks for joining me this week. On June 3rd, an opinion article appeared in a local paper that really made me scratch my head. It focused on the estate tax, and it made several points about why the estate tax was such a great idea. Let's first start with some of the facts. There are two different estate taxes that an individual and family need to worry about. First, there's the federal estate tax. That starts out for individuals at around $5.3 million. Sounds like a very high amount. It probably isn't something that most people have to worry about. There's also the state of Minnesota estate tax, and in July of 2013, it implemented its version of this estate tax at the state level. This exemption went well below the federal levels, and it started at $1.2 million per person. The article made several points that I wanted to address today. First, the writer suggests that an estate tax is, quote, a relatively painless way to restore a little fairness to the playing field. It is a limit on the concentration of wealth, and it gives government the ability to collect unrealized capital gains taxes from assets that have appreciated over time, end of quote. Let's make sure we understand this. If you're an individual that earned an income, paid taxes on those earnings, and bought an asset, they've appreciated, and now this writer feels you should pay taxes on those assets again, simply because they've increased in value and you passed away. What if your assets are tied up in a family business? What if those assets are farmland that the family has farmed for many generations? The writer feels that I should have to sell those assets simply to, quote, restore a little fairness to the playing field, end of quote. The federal estate tax is 40%. The state tax starts around 10%. Every dollar over that $5.5 million is taxed at over 50%. To me, that seems excessive. Why is the government entitled to half of a family's assets because someone passed away? The writer does make several points that can't be argued with. First, the state of Minnesota has exempted the first $4 million of farmland, but your children must farm it. With today's value, that probably is around 600 acres. So if a family has sacrificed and saved and purchased farmland, and it's more than 600, why should the government be entitled to any percentage of it? I'm glad they exempted that amount, but there's always the catches. You can't simply own farmland and rent it to others. You have to farm it. What if I inherit land from my parents, and I decide to become a teacher instead of a farmer? That means the land or the business that has passed through the generations will never reach my children, simply because I chose a different career than farming or owning that small business. That seems strange to me, and it seems very unfair. Second, the writer pointed out that the tax can be paid over time. Great, but it still has to be paid. If you owe a larger amount in taxes, does it make it fair simply because the payment can be stretched? Finally, I partially agree with the writer on her final point, that the average-sized farms must do estate planning. It's what I point out every week on this station and others to clients. She's incorrect in saying that average-sized farms must do it. Everyone must do estate planning. $1.2 million per person sounds like a huge amount to be exempted from under the Minnesota estate tax. But if you've worked 40 years, earned a salary, saved hard, you very well could accumulate this amount in retirement accounts, the value of your home, maybe some small inheritance, or just from saving. But this raises an interesting question. Why does estate planning matter? First, it ensures that your wishes will be followed through, and that's an important part. But here's a dirty little secret the writer never addresses. The wealthy that do estate planning rarely ever pay the estate tax. There are so many different ways to avoid these taxes with the use of skilled estate planning experts that unless you are incredibly, super duper, mega rich, we're talking hundreds of millions of dollars, these taxes will be avoided. So who does pay this tax? Usually it's those who aren't prepared to die. Good income families, the highest point of their net worth. Think about someone in their 50s or 60s, saving for retirement, paid off their home, and they suddenly pass away. Think a small business owner that has a huge value in their business, but little investments elsewhere. So let's finish with the writer's second to last paragraph. Quote, think of it this way. We're in a game and there's no expectation that everybody will win, but we want to know what the rules are, how to apply them to the same to everybody, and have to have them be enforced fairly so we might have a fighting chance in this life. I couldn't agree more with this. I think that every time I meet with politicians, I use the exact same sentences. Quote, know the rules, apply the same way, enforced fairly. This estate tax is horribly unfair. It sets up winners and losers. Some pay 50% of their goods and assets when they die to the government, some pay none. Those who have attorneys, CPA, financial planners, and die prepared don't pay the tax. The last sentence needs read again. Quote, we want to know what the rules are, have them apply the same to everybody, and have them enforced fairly so we have a fighting chance. The estate tax rules literally seem to change every 2 or 3 years. In 2007, the exception amount was $650,000. In 2009, it was $1 million. In 2010, there was no estate tax. George Steinbrenner owned the New York Yankees, mega rich, paid no estate tax. In 2012, there was no Minnesota estate tax. Today, there's 1.2 million for the Minnesota estate tax. In 2018, it's 2 million. These numbers are always changing. My argument, let's abolish the estate tax forever, federal and state. Even if we want to tax more, fine, tax more. Or maybe, just maybe, let's start realizing that not every dollar belongs to the state, local, and federal governments. I'm Brian Hensley with Intego Financial. Thanks for listening about estate planning, and let's start a conversation soon.
Brian Hensley is an investment advisor of and offers securities, investment advisory services, and financial planning through